Hey everyone. So today we're diving into something that might sound a bit boring at first, but stick with me because it actually impacts all of us, whether we live in the US or anywhere else in the world. We're talking about the US Federal Reserve and its next big decision on interest rates. Now I know the words interest rates probably don't make you jump out of your seat with excitement, but believe me, what happens next could shake up the global markets and maybe even your own wallet. Let me break it down for you. The Federal Reserve, or the Fed as it's often called, controls something called the federal funds rate. Basically, that's the rate banks charge each other to borrow money overnight. This rate matters because it also affects the rates you get for things like home loans, car loans, or business loans. Right now, the rate is super high, like the highest it's been in 20 years. And that means borrowing money is expensive, whether you're a small business owner trying to get a loan or a family looking to buy a house. But here's the kicker. Everyone's waiting to see if the Fed will lower that rate soon. And why are we all so curious? Well, for one, the chairman of the Federal Reserve, Jerome Powell, hinted that it might be time for a change. He mentioned that the U.S. job market isn't as tight as it used to be, and inflation isn't skyrocketing like it did post-pandemic. That means there's a chance they could lower the rate, making borrowing cheaper for everyone. Now, this is where it gets interesting. The U.S. isn't just any economy, it's the world's largest economy, and the U.S. dollar is the go-to currency for international trade. So when the Federal Reserve makes a move, the whole world feels it. Emerging markets like India and Brazil pay special attention to this. These countries have seen their currencies weaken when U.S. interest rates go up, which makes their imports more expensive and pushes up inflation. A cut in U.S. rates could help those economies by lowering their borrowing costs and attracting more foreign investments. So why is the Fed considering cutting rates now? Well, it all goes back to the COVID pandemic. The economy basically froze, and governments worldwide, including the U.S., flooded their markets with cash to keep things from crashing. People got stimulus checks, businesses got bailouts, and the Fed dropped interest rates to nearly zero. This move was like putting a Band-Aid on a huge wound, but eventually it led to inflation shooting up to levels we hadn't seen since the 80s. To fight that inflation, the Fed started raising rates in 2022, and it worked. Kind of. Inflation cooled down, and now it's back to a manageable level, but not without consequences. Higher rates have made it tough for people to buy homes or start businesses, and job growth has slowed down. That's why many experts think the Fed is ready to hit the brakes and maybe lower rates a little bit to help the economy breathe again. But here's the tricky part. Lowering rates could be seen as a double-edged sword. On one hand, it's good news for anyone with loans or people looking to borrow. On the other hand, if the Fed cuts rates too much, it might send the wrong message. Some investors could start thinking, wait, is the economy worse off than we thought? Are we heading toward a recession? So it's a delicate balancing act for the Fed. Now, let's zoom out to the rest of the world. Countries like Brazil and India could see a surge of investment if that happens, and their stock markets could get a nice boost. Over the last couple of years, the dollar has been super strong compared to other currencies. That's been great for the US, but not so much for other countries, especially ones that trade in dollars. A strong dollar makes everything more expensive for them, and it can also make it hard to pay off debts in dollars. If the Fed lowers rates, the dollar could weaken, which would be a huge relief for a lot of low-income countries. Nations like Pakistan, Lebanon, and Zambia, which have been struggling with inflation and debt, could see some much-needed breathing room. So what's next? Well, we'll have to wait and see what the Fed decides. Will they lower rates and give global markets a break, or will they play it safe and keep things steady? Either way, we know that whatever move they make will ripple through markets far beyond U.S. borders. And that's why this isn't just about the Fed or U.S. interest rates. It's about all of us. These decisions can shape everything from the price of goods to the value of your country's currency. Keep your eyes on the news because the global markets are about to get interesting.